This week has given us a whole lot of information and is certainly telling us where we're going to go. We saw a very strong rally to start off Monday, put us into a new all-time highs. We saw 2 days softer after that, but we remained in a very narrow range, just kind of staying in this range. Yesterday, we kind of recouped the losses from Tuesday and Wednesday. Today, we had a relatively flat open to the day, relatively flat most of the day, and then saw a pretty dramatic rally into the close as people, kind of made those decisions, had sellers already sell, all these kinds of things, all these just general market forces and dynamics take place that led to the rally. But there were some fundamental things which stick out that are leading us, giving us everything we need to predict where the market's going to go from here and to justify what may be this aggressive face ripper rally that we are about to experience. So first thing, we had Tuesday and Wednesday be relatively flat, although down, but relatively flat. They were flat days after an aggressive Monday rally. But on Tuesday and Wednesday, what happened was pouring cold water on potential stimulus and infrastructure talk. Thursday, didn't have a whole lot going on. Market recovered. This morning, we got very hot inflation data, above expectations, and it was suspicious, to say the least, the fact that the government website was down and this information was only reported to a couple sources and then found its way back in. Yeah, something is going on there, at least in inflation. Certainly inflation is occurring. I just heard someone say on CNBC that there's been more stimulus pumped in here for the COVID pandemic than World War I. And I want to get into a little bit of, an inflation history lesson right now. In World War I, we were able to stimulate, but we were also able to increase productivity. People were working. There was tremendous improvements in technology, developments of technology, production of cars. All these kinds of things were going on with that stimulus. Actual, real production. The productivity curve was increasing. That is not the case here. And the case here is much more similar to the 1920s and 30s German Weimar Republic. After Germany lost World War I, they were forced to pay reparations to Belgium and France. They made their first payment, but then couldn't make their second. The Belgian and the French came into the country and occupied the mines, the factories, etc. And the German government, being heated at these governments, said, don't go to work, we'll pay your wages. They printed a lot of money, paid people not to work. That is exactly what has been happening here. So it is without doubt, in my opinion, that something similar with regards to inflation is going to also occur here. And that means stock prices rise, in my opinion. And we saw that today because bond yields were up and stock prices were also up healthily. And this is what I've been saying the market has been getting wrong. The market has been selling when bond yields rise. I think that maybe had been accurate in historical environments of the last 20 years when inflation was really low. When bond yields went up, it meant it was harder for companies to get money. Now, it's easy for people to get money. There's so much money out there, and bond yields aren't really going up in real terms, only nominal terms. I think stocks should also adjust in nominal terms, and that means going up because the products they are selling are going up in price. Input prices too, but so are earnings because they are profitable companies. Regardless, profitable companies is what we want. We want good businesses that are ideally correlated with inflation. So think energy, these areas of the market that have been hated, their potential is undeterminable in inflation. I'm not saying we're going to get some crazy inflation, but I'm saying they are, in a pretty good spot. We've seen areas of the economy prices up over 100%. So I'm not saying that's going to happen, but I'm paying double the gas and the economy isn't even reopened yet. So come on, And we'll see what happens. Come on, man. Come on, man. Come on, man. Joe Biden. So that's the deal for today. And until next time, peace out.